let me get out and access again, okay? Because
all right, okay.
Problem.
Okay, so why don't I think, yeah, there are several people who are also under your name.
I know why this is happening now. Let me check.
Oh, there were like 3 Cesar Castillo.
Yeah. It made me think a little bit of kind of, quantum physics and multiple universes, and something that's quite different from what we're planning to do right now. So actually, let's just wait. Doesn't seem that we have people in until now. So let's just wait for Cesar for a minute, and then I think we can start once he's back. Okay, Cesar, can you hear us?
Yes, I can hear you. I know what is happening, but it's okay. I mean,
It's fine. It seems that we have two other people here at least. So let me start now, I guess, addressing the audience who's going to be watching this recording until people come to this panel. Let me just start by kind of introducing the outline of these next 2 hours. What I'm planning to do is to have a short, brief introduction of the speakers. And then what we'll do is we're going to speak in order. So I'm going to start, and then it's going to be Adam, Raul, and Cesar. And what we'll do is we'll have 15 minutes for each speaker, then 5 or so minutes for the commentator. And then if there are people here, we can have some more general questions from the audience, excuse me, or from the other speakers. And then we move for 15, 20 minutes, and then we move to the next speaker. So let me start. My name is Ibrahim Shikaki. I am a professor of economics at Trinity College. My research interests are in growth and distribution, economic income and wealth inequality, political economy in general, but also particularly the political economy of the Palestinian economy. And I will be presenting on measuring the weight share in the Palestinian economy. Adam Abu Bakr is a PhD candidate at UMass Amherst. His research interests are in macro development, political economy, and their relationship to income distribution. And he will be presenting on the macroeconomic determinants of post-apartheid income distribution in South Africa. Raul Zelada Aprili is an assistant professor of economics at Trinity College. His research interests are also in macro development, structuralist economics, and fiscal policy, especially the role of infrastructure spending in Bolivia. He will be presenting the dynamics of the decline in income inequality in Bolivia. And finally, Cesar Castillo Garcia is a PhD student of economics at the New School for Social Research. His main research fields are economic history, history of economic thought, and macroeconomics. Currently, his main research focuses is on the study of neoliberalism, functional and personal distribution of income, and precarious work. And he will be presenting on factor income distribution and capital accumulation in Peru. So now you have a short introduction. I'm going to start with myself. I'm going to time myself as well, so 15 minutes, and then we'll have some comments from Adam, and we'll see if the other speakers also have some comments there. Let me share my screen. Okay. And can everybody see this okay?
Yeah, that's fine.
All right, wonderful. So this is the, let me just put this here. This is the title, Measuring the Wage Share in Palestine, Military Occupation and Class Struggle. And really at this point, and Adam has read the full paper, at this point, this is really where the paper is at measurement. Particularly because I've been reluctant to go forward a little bit because I'm interested in soliciting feedback on the methodology, mostly because I made it up. We basically don't have a time series for the wage share in Palestine, and we don't have the national accounting in terms of the income approach of the GDP in order to calculate the wage share as we would normally do when you have that type of data. And so I've been looking at different approaches to measuring the wage share. And I'm going to be asking for some feedback on that. For these next 14 and 45 minutes and 45 seconds, really three things will be hopefully available to you. The first is an introduction to the Palestinian economy. And rather than looking at the unemployment rate and the share of different sectors, what I plan to do is put it in the context of economic dependency and the relationship between the Palestinian and Israeli economy. I feel that's the best way of introducing what the Palestinian economy is about. And second, really talking about the motivation. So the motivation for this paper partly comes from working on another paper. That one is more finalized, that was submitted. It is a growth model using a Kolekskian / structuralist approach of looking at the Palestinian economy. And the questions of that paper is about who bears the burden, the economic burden of the Israeli occupation. Is it the workers or the capitalists? And that kind of led me to thinking about, well, how do we look at the bargaining power of labor and trying to figure out what the wage share looks like in the Palestinian economy. And then finally kind of presenting some of the work that I did in terms of the measurement, in terms of the challenges that I've gone through and the preliminary results and questions that I have that I hopefully can get some answers from you guys. So I'll start with this in terms of the dependency framework. For people who are attending or are going to be listening to this, I don't think it's a surprise when I say that the neoclassical approach, in my opinion, is insufficient as a tool of analysis in the Palestinian economy or really in other more general instances. And in particular, within the Palestinian situation, I think it's insufficient because it assumes that if you have some sort of proximity between two strong and weak economies, that will ultimately lead to some sort of general positive effect on the smaller economy. What I argue is that a more appropriate framework would be some sort of kind of dependency framework. What I mean by that particularly is understanding the relationship between the Palestinian and Israeli economy as a set of movements. On the one hand, you have movement of resources, that's natural and human resources, so labor, from the periphery to the core. And on the other hand, you have the movement of final goods. Again, not surprisingly for the people that are here, what that leads is to a state of underdevelopment, or what Sarah Roy calls in the Palestinian situation, de-development, where these economies are unable to develop a productive sector, they have increased trade deficit, and they remain dependent on the labor and goods market. Not only that, you have this kind of structural distortion where economic sectors in the periphery are basically there to serve the core economy. On the other hand, those rich economies make use of the reserve army of labor. They ensure low cost of production. They open up the periphery's markets, and that guarantees that they don't have any crisis of overproduction where firms are unable to sell their commodities. So just a few visuals for you to get an idea of what I mean by that in terms of the labor market. This is a graph that shows two variables. The unemployment rate is in the black line, and the percentage of Palestinian workers who work in the Israeli economy is the dashed gray line. And basically what I'm trying to show here first is that obviously since 1967, since the occupation of the West Bank and the Gaza Strip, that's what we call the Palestinian economy today, there's been an increase in the percentage of Palestinians who work in the Israeli economy, where it reached up to 40%. Again, this is actually a very serious underestimation. We can talk about that later. But the point that I wanted to show is that as long as you have opportunities for these workers to work in the Israeli economy, you have relatively low levels of unemployment and vice versa. So you do have a significant proportion. Even today, while the official number is around 10-15% of Palestinian labor who works in the Israeli economy, on the other hand, you have goods moving the other way around. So this is only the trade deficit in the Palestinian economy for the last 50 years or so. But if you add to this visual the fact that 70 to 80% of Palestinian imports and exports are with the Israeli economy, then you get the picture of the movement of Israeli final goods to the Palestinian economy. This has, not surprisingly, changed the structural composition of what the domestic economy looks like, particularly those who used to work in agriculture. So these are a few of the sectors in the Palestinian economy. These two over here are services and agriculture. So agriculture is the dashed line and services the solid line. So what you see again, since the occupation of the West Bank and the Gaza Strip, what we call the Palestinian territory, Palestinian economy, there's been a decline in those who work in agriculture. These are people who had access to their lands. Think of some sort of combination between, what Harvey would call accumulation by disposition or kind of primitive accumulation of Marx. The people who used to have land to work on, they used to be self-employed in terms of labor statistics, and now they only have their labor, right? And now they become wage workers because those lands don't exist anymore for them. What this has also done, not only have they created a shift, a structural shift in terms of sectors, but also what we call the type of work that you have. So what I did here is trying to look, again, these are two indicators in solid line of black, that's the percentage of Palestinian workers in Israel. This is the left side. And on the right side, it's a different scale. This is the total wage labor as a percentage. So what is the percentage of Palestinian labor who works as wage workers versus either being self-employed or being employers or being unpaid family workers? And what you see is very, at least visually again, I haven't done yet any of the statistical tests, but at least visually what you see is that the more you've had the opportunity to work in Israel, the more people who work in the Israeli economy, the more people are moving from being self-employed to being wage workers, if you want to call it the proletarianization of the Palestinian labor force in the late 60s. And so this is what the economy has looked like in the last 50, 60 years. The motivation for writing about this really is thinking about the impact of the Israeli occupation. So these are just three quotes from reports from the World Bank, United Nations Conference for Trade and Development, and local institutions who are talking about the impact, again, economic here, we're focusing, of the Israeli occupation on the Palestinian economy. What Bota and Vaji have done, so this is a paper in the Review of Political Economy in 2012, have kind of thought to kind of model the impact of the Israeli economy through understanding a third claimant on income. So if we think of how income is distributed, all of us are working on functional distribution of income. This is an equation that we're familiar with, right? The total income is the wage bill plus total profits. That's before we look at the Israeli restrictions on movement as an indicator or a proxy for Israeli economic impact on the Palestinian economy. After the restriction, we have this as the effective income, right? So it's the value of total income times this 1 minus theta, where theta in that sense is kind of the restrictions, right? The percentage loss, if you think about it, of income because of the Israeli occupation. So the third claimant now on income, you don't only have total wage bill, you don't only have total profits, but you also have this income that is foregone because of the Israeli occupation. However, what they did was that they assumed that it's the profit share that fully absorbs the impact. So what they were assuming is that capitalists passively Palestinian capitalists would passively accept this result in their diminishing profit output and income. And so what I argued is that, hold on a second, another extreme that it's worth, at least looking at, if one extreme is where the capitalists bear all the burden, probably a more realistic extreme is thinking of capitalists channeling the burden to workers via the nominal wage. And I thought that was more appropriate given the weak bargaining power of labor. So you have a very high unemployment rate for the last 20 years in the Palestinian economy. You have weak protection of workers, and you have a large informal sector. And so because of all of these, I thought, it's worth it then to think of the other approach. And that's what I did in the paper. But at the same time, I was thinking, well, hold on. If I'm thinking about the bargaining power of labor, probably thinking about the wage share is, at least one of the main things that we think about as heterodox economists in terms of the bargaining power of labor. And so I didn't find any, and there isn't until now, any kind of time series of the wage share in the Palestinian economy. We don't have aggregate data on wages or non-wage components. We have 25% of the labor force that is self-employed, and there's no information about the income that they receive. You have a sizable proportion that works in the Israeli economy, so you have to think of two wage shares, a domestic and a national one. And then on top of all of that, you only have data from the Palestinian Bureau of Statistics since the establishment of the Palestinian Authority in the early 1990s. The data then comes before that only from the Israeli side, so you have to think of the discrepancies between the two approaches. And this is where I started to look at alternatives. One possible alternative for me is what is called the economic survey series. So that actually includes a good amount of information. You have data on the number of economic establishment, the former ones at least, the number of engaged persons, people who are paid or not paid in those establishments, output, gross value added, and these data points, these concepts that we use for the wage share. Most importantly, the compensation of employees and gross value added. Normally, that's what you do. You divide compensation of employees over gross value added, and you have a wage share. Very frequently updated. I use it, and then boom, wonderful. What do I get? I get a wage share that has been declining from 2001 up into 2006, which is at the time when the Israeli restrictions were at the height. So it's kind of, if I were smart, I would have stopped then and said, okay, wonderful. This is exactly what I want to do. All I need to do is, just make sure it's stationary, then maybe do some statistical text. I wasn't smart, Mao has a chapter about self-criticism. So I was like, okay, let me stop here for a second. I'm using this economic survey series, but in reality, it doesn't include different sectors, and we can discuss about whether we should include them or not. It doesn't include employment in the informal sector. It does not cover any period before 1993 because it's particular to the Palestinian data. And I don't have any information on the work in Israel. And really here, and maybe we can leave this for later, the discussion then is about, well, do I need these or not? What really am I trying to measure through the wage share? So what I did, and this is the final part of the presentation, what I did then, aside from looking at this economic survey establishment, is to try to find data from the labor force survey, right? The labor force survey in that aspect has all the economic activities. It has data on workers in the informal sector, working in Israel and Israeli settlements, and it includes variables that I can use to somehow create a wage share or labor share. And so what I do is I try to calculate aggregate wages using the information from the labor force survey. So I'll just go over through this equation, an equation on the second graph, and I'll stop then. But this is then what the wage share looks like. So I look at the labor force, the number of people in the labor force who are wage workers, times how many days do they work per month, times 12 months, times the average wage for those who are in the domestic economy. That subscript D is for the domestic economy. I divided by the exchange rate because the wage rate is in Israeli shekel, that's the currency that we use, but GDP or GNI is in US dollar. And I find a wage share then. Finally, I also have to deal with the issue of self-employment. And so there are different ways to deal with self-employment. I know a couple of you in your papers also deal with this. But what I utilize is the approach of imputing income from self-employment according to the characteristics of the labor force. So what I decide to do is I come according to the domestic wage, not the wage in Israel because it's much higher. And because I know that the majority of people who are in the informal sector work domestically and not in the Israeli economy. And I assume, and maybe we can discuss this a little bit, that the self-employed are paid as the same as wage workers. I talk a little bit in the paper about what I do that, but that is the assumption that I have. And so aside from the exact same equation that I had before, I add the income from those who are self-employed. And I get a result. And again, this is where I kind of stop. I'm a minute ahead of already a minute past my time, but I get a result that relates the domestic and the national labor shares that is very within the lines of other countries. So I chose some countries that are close geographically to Palestine, but I also chose countries that have similar GDP per capita to Palestine. And I put the result that I have there to take a look at. And that's where I am really now, which from my sense is kind of like right in the middle. Before I go to these points, right, I want to check for stationarity. Obviously, I want to juxtapose this with other political or macro developments, thinking of some of the tests, doing error correction models and co-integration tests. And then finally, after 1, 2, and 3 maybe are done, or maybe in another paper would be kind of looking at a little bit closer to maybe what Cesar is working on, kind of the growth regime analysis, right? Is this wage share or profit share? But before all of that, I kind of wanted, and I'm kind of soliciting feedback on this methodology that I'm using. So I'll stop here. I'm 3 minutes already ahead of time, but until now, it doesn't seem that there's a lot of people here. So I think it'll be a nice internal discussion that we have. So Adam, the floor is yours. And thank you guys for bearing with me.
Oh, before Adam starts, I'm sorry. So there are 7 people actually that are watching this presentation. So when you go to participants, it's divided between the panelists and attendees, by the way. Okay.
Thanks, Ibrahim. Thanks, Raul. Let me start by saying that I really enjoyed following your presentation, Ibrahim, and reading your paper, and definitely your in the presentation. Some of the questions that I had have been clarified a little bit, and so I hope my comments won't be, in a sense, a little bit repetitive from some of the major points that you made in your presentation. But let me first start by saying why I think the paper is significant. I mean, it's the first time series of the Palestinian labor share across a very important period of Palestinian economic history. And personally, I find it a very interesting subject to learn about. One, because I don't know enough about how class conflict is influenced by the occupation. I also don't know enough about the key measurement debates that are key to some of this discussion about functional income shares. And your paper, Ibrahim, outlines the main challenges for estimating the labor share in developing countries, I think, really well, or at least some of the main challenges. And yeah, these principally regard kind of the lack of, as you said, the income-based approach to measuring GDP and national accounts data. It relates to the issue of the size of the informal sector, the large number of Palestinians working in Israel, and also some issues about the shifts in the collection of the data. So I just wanted to stress that, yeah, I think you're making a significant contribution by attempting to overcome those data issues in an under-researched region. that is also, subject to quite harsh social and economic conditions right now. And, for these reasons, I think the paper is to be praised, and I look forward to seeing it obtain a significant audience. When reading the paper, a few questions that came to mind. I hope, as I say, that there'll be a useful basis for conversation and that they won't be kind of too repetitive with points you helped me understand in the presentation. At one point in the paper, you seem to be interested in deriving a measure of the wage share, which you say is desirable from a Marxian perspective, particularly one that excludes the informal sector, public sector, and agricultural sector workers. I think that's from the Economic Survey series data. However, I was thinking that developments in these sectors might have, significant relationships with what we might call our standard capitalist sectors. And I was wondering, is this data, better than, is less data better than more in this instance? And how do your different measures of the wage or labor share relate to different reasons for having an interest in the functional distribution of income, such as political dynamics or welfare of the poor or long-run growth? I mean, I think you clarify some of this to an extent, but basically my point is, in other words, I think you can clarify precisely where you think the measures of income distribution are actually interesting for addressing a wider array of issues. As a clarificatory question, I was also wondering whether your measures of GDP and GNI include production and income from self-employment, and if not, do you get an inflated measure of the labor share when you add kind of imputed self-employed incomes to your labor share measures? So it seems like you include the self-employed incomes on the numerator, but I wasn't sure if it was also entering in the denominator for your wage share measure. I was also interested in understanding a little bit more about the public sector value added, and whether there really aren't, they might not be profits in a conventional sense, but are wages in the public sector equivalent to value added? Because if not, it's not necessarily the case that including the public sector should increase the overall wage share when you aggregate across sectors. Just one or two more questions, if I may, if there's still time. I was also thinking that, kind of given the number of Palestinian labor force participants working in Israel has been falling, as you show in your paper, and given that average wages in Israel must be much higher than Palestine, I would expect, in line with the differential in per capita incomes, I would have expected the domestic wage share to have fallen considerably when the number of Palestinian labor force participants working in Israel falls. And that's, firstly because of the unemployment rate skyrocketing. I mean, the reserve army has grown. But secondly, also Palestinian firms no longer have to compete as much with Israeli firms paying higher wages, in a sense, to attract labor. And they might also be kind of strong internal Palestinian relative wage norms. So let's say Palestinian wages are typically fixed at 30% of Israeli wages. It would be expected that if a lot of workers from Palestinians working in Israel came back, maybe those it would no longer be required that Palestinian firms pay as high as 30%. Maybe it would fall to 10% or something. So I don't know, but that was just an idea about whether the data is fitting with some of these observations about labor force participation in Israel. I was also finally wondering, my last question is whether your measure of the labor share might be artificially inflated by the assumption that self-employed workers earn an income equivalent to the average wage. And I was wondering how this assumption squares with the typical presence of formal sector wage premiums. So sorry, there's a lot of questions, and just choose the ones that you think are interesting. And yeah, thanks again for your presentation, which I really enjoyed.
Absolutely, and thank you for these, Adam. I mean, these are wonderful questions. Some of them that I've been, grappling with a little bit I'm wondering if what I should do maybe is to open up and see, just in case. Thank you, Raul, for pointing my attention to the attendees list that we have. If there are any questions from the attendees, then maybe I can kind of combine some of these and answer them collectively. So if you can, I see there are a couple of questions already. One is, it would be interesting to compare the wage share of Palestinians with that of Israeli workers in order to distinguish the role that the occupation plays in relation to Israeli general distribution issue. And then, how is the trade deficit financed? Okay, so I'm going to add that question over there a little bit. And just wondering if there are any other questions. You can either write them in the Q&A. I'm not sure if you have the ability to raise the hand there as well. I think I can. It says allow to talk. I can allow attendees to talk if they raise their hands. I feel so much power. I missed the first question. Is there a first question, Paolo?
I don't see the first question.
Yeah, I don't see the first question, Paolo. Sorry. It does show that number 2 and 3 are there, but I don't see number 1. So maybe, okay, how do you explain the variability of the wage share relative to the share in other countries you selected? Okay, so let me try kind of put also, I'm thinking in terms of the time that we have, hopefully in the next 5-6 minutes to kind of respond to several of these questions. Very interesting. Adam, I'll start with some of your questions. First, really in terms of thinking of what the wage share is actually measuring, you mentioned before kind of where I talk about what do I want from the wage share? And the way that I've been thinking about it really is that from a more, I would call it simple Marxian perspective, I've been thinking about it as a way of looking really at the surplus value. If you think about it, in order to, calculate the rate of exploitation, you have unpaid labor divided by paid labor in that sense. So unpaid labor is that surplus value that you look for. And so in that sense, understanding the wage share as a signal, as an indicator of bargaining power of labor seems a little bit more straightforward. In a lot of the post-Keynesian literature, I feel that there's more discussion about the consumption behavior of workers versus capitalists, or the consumption behavior of people who earn their income from labor versus people who earn their income from non-labor, from property. And I feel that's where it makes sense for me to expand a little bit and to have an idea of the whole economy. So in my mind, this is how I see the differentiation between them. Related to that, you mentioned an important question. Are wages in the public sector the same as value added? I hope so, because I've just assumed that, to be completely honest. And I think you bring up an important section. I kind of just assumed that they are. And so I've been kind of adding them in the sense that there's this assumption that in the public sector, that value added is wages. In that sense, you don't have a profit, it's not a for-profit sector. And so I think I would thank you for pointing my attention to that, because I really I should double check that a little bit. You mentioned a question about the artificial, the difference between wages in the Palestinian economy and the Israeli economy. Absolutely, Adam. So what's been happening for a very long time is that there's been some sort of artificial increase in wage rates within the Palestinian economy because of the availability of work in Israel. Now, the point is, and I think I mentioned just a little bit of this in the presentation, the official data really does not show the level. So the official data really has to do with the level of permits that are issued for Palestinian workers. There are a lot of people right now working on this issue within the Palestinian economy who say that really that percentage of Palestinian workers in Israel really has been relatively steady for the last 40, 50 years, but the percentage of permits that are officially issued go up and down. Moreover, you actually have Palestinians who are working in the Israeli economy who are working in particular sectors that relate directly to those within the domestic sector. So because of this even somewhat slight fluctuation that you have, I don't think that, I wouldn't have expected that domestically, you know, the wage share would go down, that kind of Palestinian capitalists would not feel the need or the pressure for the relatively artificial wage. I think that's always been there for a very long time. At least, you know, this is the way that I see it. I just want to have a lot of important questions that you asked, Adam. Yes, so maybe the final one that I have a hopefully decent answer for is, am I inflating it by assuming that the wage is the same as the wage of the informal people who work in the informal sector is the same, you know, as in the formal sector? So this is a question that, you know, people in the literature have also asked about. And I think it was Golan really who really says, listen, you can think of self-employment as it relates to the informal sector in different ways. Self-employment, maybe let's say in the US, that type of income might be closer to income that you get from property. That might be closer to the profit share. However, in a lot of, you know, developing countries, instances specifically where and in the Palestinian economy, that's also the case. The percentage of people who work in the informal sector or self-employed in construction and agriculture, manufacturing are high. Within the Palestinian economy, there's not much that difference. 10, 15 years ago, when I first graduated from undergraduate work, I participated doing field research on this, working on the informal sector in those three sectors. And the wage differentials was not significant in the sense that it wasn't as diverged as within the Palestinian economy versus that in the Israeli economy, where you really saw the wage share. So I do think it's an acceptable way of looking at it. However, one thing that I am planning to do this summer is to do field research in Palestine. I'm going to be there. I'm also going to be meeting with people from the Palestinian Central Bureau of Statistics to get the exact demographic characteristics of those who work in the informal sector and try to match them with the wages of those in the same sector that have the same demographic characteristics. That might be a little bit more kind of directed. To some of the other questions that were there, Paolo, particularly question 2, very recently I participated in a book called The Political Economy of Palestine. Sheer Hever, who works on the political economy of the occupation, has a very interesting chapter in that book that I believe should be the future of economic research done on the Palestinian-Israeli economy, where he tries to look at inequality. But he's looking at the Gini, so he's looking at personal distribution of income. But I think the next step would be exactly what you're saying, which is in terms of the wage share of those who work in the Palestinian and Israeli economies. You know, there's a lot of literature about how Palestinian work in Israel has also kind of pacified class conflict within the Israeli economy. And I think this is, you know, this would be an interesting aspect to kind of look at it. How the trade deficit is financed, Paolo, international aid. In the Palestinian economy, international aid really is the way that all of our deficits are financed. And then comparing the wage share relative to other ones, I don't know yet, because I'm kind of still, again, reluctant to, even though I'm very proud of the work that I've put in this, I want to be really precise in the measurement that I have before kind of comparing it. And again, this is why this is at this early stage. But thank you all. Thank you, Adam. I think I probably touched on most of the questions, but not all. Maybe later on, if we have some time, we can go for a more general discussion. But now I'll leave the floor to you. I'll maybe give you a reminder around 15 minutes, although we're a little bit already past that now. But please go ahead, Adam.
Thanks so much, Ibrahim. Let me start. So I hope you can all see my screen okay. And yeah, okay. So good afternoon, I'm Adam Abubakar. As you know, I'm a PhD candidate at UMass Amherst, and basically I'm going to discuss some research I've been working on regarding macroeconomic determinants of SA, South Africa's post-apartheid income distribution. Now, the overview, I'm going to start by discussing what's motivating the research, some stylized facts. I'll characterize the context in question with these stylized facts, and then I'll discuss my hypothesis, why I think it's relevant to the stylized facts, before touching on methodology, econometric results, conclusions, and finally some caveats. The main motivation underpinning my research concerns explaining something of a puzzle. Why did the African National Congress, the ANC, fail to deliver redistribution after the end of apartheid? The first decades were where democratic dividends were expected. In the first decades of democracy, democratic dividends were expected for the previously disenfranchised majority. And trade unions have been kind of a key player in the ruling political alliance. So, there is a kind of a puzzle to identify. And it's a question brought up by, in a recent paper, a review of an interesting book that came out on the post-apartheid era. So Michi 2020 asked this question: why did the ANC fail to deliver redistribution? And if you look at some of the other social science literature on this question, you can look at the sociologist Charles Tilley. He comments on the democratic transition in SA, quote, that shift in political power will most likely cause some equalization in wealth, income, education, health, housing, and living conditions across what had been one of the world's starkest divisions of categorical inequality. So there's this expectation that the ANC would have, or democracy would have equalized the country, and that hasn't happened according to some people. Moreover, my research is motivated by the very intense debate in the ruling alliance since the early stages of the transition about income distribution. Now, the ruling alliance is the ANC, the Congress of South African Trade Unions, and the South African Communist Party. And the debate was, at least rhetorically, about whether growth should be through redistribution or redistribution through growth. Before I continue, I want to say that I should be clear, in the analysis that follows, I make no apologies for the ANC, but I'm basically not sure that the premise that the ANC failed to deliver redistribution because of anti-state ideology or something like that, I'm not sure that that's really the right premise. And I don't think that post-apartheid SA is really a good case study for looking at the effects of neoliberal policies. And this view runs counter to, I would say, an influential critique of post-apartheid policy concerning a neoliberal turn within the ANC. This critique has been focused around issues of trade liberalization, financialization, and capital account openness. And aspects of these critiques absolutely have substance. However, the accusation of neoliberalism I find hard to square with the considerable expansion of social security. So a recent general household survey showed that the number of social grant recipients had grown from under 13% of the population in 2003 to nearly 31% of the population before the pandemic. So I think some of these facts shed doubt on concerns about austere fiscal policy and other measures of austerity. It's also true that there is literature like Chatterjee et al. 2021, which shows quite, I think, clearly that personal income distribution has really improved from fiscal policy. There's been very large redistributive effects to fiscal policy. And in contrast to some of this literature on personal income distribution, I tell the less discussed aggregate and sectoral story of functional income distribution. And so, yeah, it would be tempting to see developments in the aggregate wage share as reflective of a neoliberal turn, but I show that aggregate developments mask important sectoral heterogeneity, and that this sectoral heterogeneity reflects not a generalized increase in the intensity of worker exploitation, but plausibly dynamics related to the 2000s commodity boom. So let me speak to what the data suggests in a descriptive sense. Here we can see the post-apartheid aggregate wage share measured in percent. All wage share data reflected in this presentation are calculated by my hand using quarterly national accounts data. And we see a clear U-shaped pattern in this data. So entering the democratic era, South Africa had a wage share hovering around 55% of output. And this would fall as low as 47% in the 2003 to 2008 period. So a really significant decline. After this period, the wage share returned to near its earlier level, where it has since stabilized, pre-pandemic. To me, this aggregate story belies considerable sectoral heterogeneity. So here I show in this slide how the wage share indexes, so not the wage share level, but the index for 5 sectors move in from the data in the national accounts. So the sectors I have here are manufacturing, mining, utilities, agriculture, forestry, and fishing, AFF in the key, and construction. Now, each of these sectors, I think, tells interesting stories, which I discuss at much greater length in my paper. But for the purposes of today's presentation, I want to focus on one sector in particular, and that's mining. So as I've mentioned already, I believe that the aggregate story that we see, that we saw in this slide, I believe that the aggregate story is considerably influenced by what's happening in during the 2000s commodity boom. And that makes analyzing the mining wage share of obvious interest, I think. So I think that economies with large mining sectors may be distorted in ways that warrant closer analysis. And this is certainly true that many South Africans are aware of the history of mining and how that's played out in terms of distribution because of the country's political and cultural history. Looking at mining is a natural place to start, I think. The role of mining is also reflected, in discussions about South African inequality. In like the first chapter of Piketty's book, Capital in the 21st Century, it opens with a discussion of the Platinum Belt massacre of 34 mine workers in Marikana near Johannesburg in 2012. Now, when I calculated and looked at the data for the mining wage share, I was struck by what I see, but I was a little bit unsurprised by both the level and the trend. I mean, it's a really significant decline over much of the democratic era. Basically, what we see here in mining is that the wage share had fallen nearly 20% at one point. And at the end of my series, the mining wage share sits at less than 12% of what it was, or 12% below what it was pre-democracy. Now, to understand why this has happened, I gave some thought to what might be something of unique characteristics of the mining sector. And I think a key feature that I expect to influence wage bargaining in the sector concerns the fact that the output from the mining sector does not feature much in the average worker's wage basket. So where workers target a real level of consumption, rather than necessarily an output share, but a real level of consumption, and where producer prices are quite volatile, I hypothesize that output sharing agreements may be exceptionally weak. And what this hypothesis amounts to is ultimately a claim about the prospects for significant differences between, on the one hand, real consumption wages, and on the other hand, real product average wages, okay? And the difference between these two wage rates is determined by movements in the relative price of consumer prices to producer prices. And in this instance, I'm interested in mining. So it's the relative prices of consumer prices, which is a general index, to the mining producer price index. Now, in the notation on the slide, subscripts I and T represent the sector and period. Superscript C and P represent consumption and product. Capital W is the wage bill. L is employment. CPI is the general consumer price index, and PPI is the producer price index of the sector. And for reasons of that will be important for later, I call the relative price of CPI to PPI in the mining sector the mining wedge, and I call it that because it moves a wedge. When it moves a wedge between real product wages and real consumption wages, and I think that's a really important driver of income distribution effectively. One more point about the slide. Because mining goods are not a significant feature of worker consumption baskets, and where mining trade unions are bureaucratized, basically the story that, with my hypothesis is that I believe that output sharing agreements are just very, very weak, and the wedge is likely to be very highly correlated with the wage share. Now, my specific research question is akin to identifying just exactly how important the wedge is, as I defined it earlier, to distributive outcomes. And on this slide, what you see is my figure depicting indexes for the mining wage share and the mining wedge. And just from the kind of visual, as a first approximation, just looking at this graph, I think that there's quite a considerable correlation between the mining wedge and the mining wage share indexes. So it's a kind of, let's say, a basis for me to be encouraged about my hypothesis before I analyze it more carefully. Now, to analyze it with more than just an eyeball, I use a range of methods, including tests for stationarity, so augmented Dickey-Fuller tests. I use error correction models and the bounce test of Pesseran et al. 2001 to test for correlation. Very briefly, I use quarterly data, and my number of observations is 109. My period of interest is Q1 of 1993 to Q1 of 2020. Let me just check with Ibrahim. How am I doing for time, Ibrahim?
5 minutes.
5 minutes. Okay. So the ADF, the augmented Dickey-Fuller test, suggests all my key variables are non-stationary. This suggests that there's a danger of spurious regression if estimating the associations in levels. And as a result, I use an error correction model to address related concerns. Now, just briefly, the error correction model regresses first differences of dependent variables on first differences of independent variables to obtain short-run relationships of interest. And in order to make inference about long-run relationships, you need a co-integration relationship to exist. So in the notation I have here on the slide, delta represents the first difference, sigma is the wage share in sector T, alpha naught is an intercept, and the second term basically captures the effects of lags of the dependent variable. In my study, up to a maximum of 4 lags, and the lag structure is chosen according to the IKK information criterion. The third term represents a vector mu of independent variables run in first differences, again for a maximum of up to 4 lags. And the fourth term is the error correction term, which, if statistically significant, reflects the presence of a co-integration relationship. Final term, as standard, is the error term. And just briefly, I use New US standard errors to address possible heteroscedasticity and autocorrelation issues. Now, quickly, my results. Because of the inclusion of lags, my regression tables are quite long, and I thought it'd be easier just to explain the main result verbally. So the key result is that the mining wedge has a very statistically significant positive association with the mining wage share, which is robust to inclusion of a number of contrasting explanations. So concretely, what the coefficient of the mining wedge suggests is that a 1 percentage point increase in the mining wedge is associated with between 0.23 and 0.42 percentage point increase in the mining wage share. And this suggests that the falling mining wage during the commodity boom is really compatible with the falling wage share in mining. Now, what to make of this result? My main point would be that it's not necessarily very informative to analyze the aggregate wage share, where the aggregate wage share masks, vast sectoral heterogeneity. We saw in an earlier slide, I have a lot of variation from sector to sector in the wage share. And certainly assuming a one sector economy with a generalized increase in the intensity of exploitation is hard to square with the data I analyze. And to my mind, the commodity boom story is a fairly distinct story from the story about neoliberalism that many people have told about post-apartheid income distribution. What policy conclusions follow? I'm pretty cautious about making strong policy recommendations on the back of this analysis. But I would advocate for the state to do much more to capture the windfalls that are reaped in sectors like mining when commodity prices boom. And so I think there's a really strong role for corporate taxation that should be used to be channeled productively to growth relevant projects. I also believe that there are kind of two dangers that exist in the absence of stronger corporate taxes to take commodity windfalls. The first danger, I think, is that capitalists uniquely accrue the windfall, and they splurge it on luxury imports at great social and economic costs. And I think the second danger is that the workers uniquely accrue the windfall. If there are strong relative wage norms, so if the wage share in manufacturing is a fixed proportion of the wage, if the average wage in manufacturing is a fixed proportion of the average wage in mining, if workers take all the windfall in mining, that's going to squeeze profits in manufacturing, and you can have kind of harmful repercussions for your long run growth when you have this sort of profit squeeze. Very quick caveats. The elasticity of the mining wage share to the mining wage that I discuss, that's the coefficient on the mining wage. It's perhaps surprisingly small. If wages are not adjusting to the windfall, as I hypothesize, then non-wage input prices have to grow pretty fast, such that the inverse productivity term, which is the last term on my definition of the wage share in the slide, so LR over YR, that's the employment in mining over the output in mining, that has to fall quite a lot to offset the CPI over PR ratio, that's only really possible if prices rise really fast in a kind of intermediate input sector. So this is an important caveat. So my results are, in a sense, a little bit surprising. And this last point really raises a question about whether my conclusion about the mining wage share is in a sense axiomatic. If the CPI to PR ratio or the mining wage is in a sense definitionally related to the wage share. So in a sense, it can be axiomatic to claim that this is driving inequality. That may be true, it might be axiomatic, but the mining wage has not been a factor in analyses of South African inequality. So I think it's interesting to bring this forward. The final caveat, the last point I want to make, is that I look into reduced form associations. I don't identify a clear mechanism, and many might have concerns about endogeneity. However, mining producer prices are set internationally, and I'm doubtful the sector level wage share in mining is driving kind of aggregate consumer prices. So I'm not so scared about endogeneity. But yeah, I would be very happy to hear any suggestions for different methodologies or any comments and criticisms using this data that I have. To my knowledge, the firm level data just isn't available for my period of interest. And so I have to use this time series data, and as a result, I have to use time series methods. Okay, these are my references, but I'm running a bit over. So let me just say thanks. I look forward to your comments.
Thank you, Adam. Wonderful presentation, wonderful paper. So here's what I'm planning to do. I mean, this panel is about about equality, distribution equality. So what I'm thinking of doing, because we've already have 1 hour and we have 2 presentations, what I'm thinking that we should do is maybe we should get Raul and Cesar to present, and then leave some of the discussion points and the general questions to the very end, just to ensure that everybody then presents, and then we can have the discussion. Jennifer, thank you so much for mentioning to me that the participants, the attendees, do not have the power to raise their hand. So again, if you have any questions, please type them in the Q&A. And at the very end, we're going to have questions and discussions for everybody. So if that's okay with the panelists and the speakers, why don't we go with Raul's presentation, then Cesar, and then we can go through the discussion. I have a lot of questions and comments, Adam, and we'll get to that in the very end, just to make sure that before that everybody presents while we're in the time of the session. Is that okay?
Yeah, thanks, Ibrahim, and sorry to the other panelists for running over.
It was my fault, basically. Raul, the floor is yours, my friend. And you are muted.
Now, can you all see the presentation? Okay, excellent. So I'm delighted to be in this particular panel. And today I would like to speak about the dynamics of the decline of income inequality in Bolivia during the post-neoliberal period. And then I'm going to talk a little bit about the periodization as we move forward. So I thought that I should start this presentation by just showing you the Gini coefficient for Bolivia starting in 1998 up until 2019. And I should mention that the neoliberal period in Bolivia started in 1985. And then, the end of the neoliberal period may be under discussion. Some people would say that it was 2003. And then there was a sort of a transition period to a post-neoliberal period between 2003 and 2006. But regardless of the way that you divide the periods, it's clear that during neoliberalism, inequality in Bolivia was very high. Around 2001, this is towards the end of the neoliberal period, the Gini coefficient was 0.61. As you may know, Latin America is famous for being probably the most unequal continent in the world. And starting in 2005 to 2006, the Gini coefficient declined quite significantly. And I'm going to discuss the literature. The literature claims that this decline, the main driver behind the reduction in inequality in Bolivia, is mainly explained by the increase in labor income at the lower end of the income distribution. So the decline in inequality is not the result of transfers, but rather the increase in labor income at the lower end of the income distribution. Now, so there are, before I tell you the research question and the hypothesis, I should mention that this decline in the Gini coefficient took place during a period of time of high growth. So this is a real growth for Bolivia. And then if you take a look at, again, at 2 periods, the neoliberal period starting in 1985, and again, up until 2003, the rate of growth of the economy on average was a little bit below 3%. And then real GDP growth between 2006 and 2018 in this particular diagram was about 5%. So these rates are not Asia-like or China-like, but for Latin America, a 5% growth rate over a sustained period of time is pretty remarkable. So there is this decline in the Gini coefficient in income inequality, and the background is a background of high economic growth. High economic growth in terms of the region, but also in terms of the own Bolivian history in the recent period. Now, just to give an idea that there is something special about this decline, I have a Gini coefficient, and then this data comes from the World Development Indicators for 4 countries. Bolivia and Ecuador are the ones that I have in mind. And just, to put things in context, I have the Gini coefficient for Colombia and Brazil. If you have, read about inequality in Latin America, Brazil and Colombia have among the highest inequality numbers in the region. But if you go back to the very beginning of this series, you can see that inequality as measured by the Gini coefficient was quite high in all of the countries that I have in this particular graph. There has been a significant decline in inequality in Ecuador, so that's given by the yellow line, but you can see that at some point in 2012 or 2013, the decline stopped, and then it's now the Gini coefficient in Ecuador up until 2016, which is the last year that we have data available, is around 0.45. Brazil and Colombia also experienced some decline in inequality, but it's not as pronounced as the decline in inequality in Ecuador and Bolivia. And then finally, if you take a look at the blue line, so you can see that the decline in the Gini coefficient for the Bolivian case is quite significant. In 2019, the Gini coefficient was about 0.41 in Bolivia. And then again, around 2000 or 2001, the Gini coefficient was 0.61. So this is a very significant decline. Now, just to put this into context again, so in the post-neoliberal period, or in the second part of the post-neoliberal period, the Bolivian economy was performing better than the average performance of Latin American economies. So here I have a real GDP growth of Bolivia versus real GDP growth of Latin America and the Caribbean. And if you go back to the earlier period, you will see that the blue line is usually below the orange line, right? So the Bolivian economy traditionally had performed below the average in terms of economic growth of the rest of Latin American countries. But then starting in 2006, there are some interesting changes that put the performance of the Bolivian economy above the average performance in terms of GDP growth, again, of the rest of Latin American countries. So there is an interesting story here that deserves to be explained in a way. So there is a decline in inequality in the context of rapid growth in terms of, of the region and the country itself. And it's not the first time that it happens. So in this diagram, and then this is the last diagram that I will show you in terms of motivation. So this is a measure of inequality between 1950 and 1970. So in 1952, Bolivia had a major national revolution, the national revolution of 1952. In this revolution, the semi-feudal mode of production was replaced by national capitalism. So up until 1952, Bolivia had a semi-feudal type of mode of production. And so indigenous people didn't have access to education. And then here we are talking about a country where at this period of time, at least 70% or 75% of the population was indigenous. And not only they didn't have access to education, but they couldn't vote either. So they couldn't be elected, they couldn't vote. So this is 1952. And the economy relied on the agricultural sector and the mining sector, especially the tin sector, but the tin sector was dominated by 4 private large enterprises. So in the national revolution of 1952, there was a large agrarian reform. So this is the second deepest agrarian reform in the continent after the Mexican Revolution of 1910. And there was the nationalization of the tin sector, and the indigenous population were granted significant social rights. So they had access to education and also they could vote. But as you can see, after the 1952 national revolution, inequality declined for the next 10 years or for the next 8 years. you can see that there is a decline of inequality up until 1960, but then inequality went back to the previous path, and then it started to increase again. So this suggests that these declines in inequality may be short-lived, right? And then, even though the Bolivian economy has experienced a significant decrease in inequality in the last 14 years or 13 years, so that's not, you know, a minor time period. Actually, it's quite a significant time period. There is always the risk that inequality will start to increase again, right? So that's sort of the question that I have. What are the determinants that will ensure that the gains in decreasing inequality can be preserved over time? That's the main motivation behind this particular paper and the series of other papers that I have in mind for this particular topic. Okay, so the main question again is about the decline in inequality and poverty in the current period and its potential for endurance. Will this decline endure the test of time, or are we going to go back to higher levels of inequality as it was the case in the aftermath of the 1952 revolution, right? And then one of the working hypotheses that I have for this particular paper is that, you know, a major difference between this particular period and the aftermath of the 1952 revolution is that in the current period, the working class and the indigenous population have gained political rights that are quite different than in the previous period. So now, in addition to having the right to vote, what we have observed is that the indigenous population and the working class have actually achieved political representation at all levels of governance in the country. This may make the difference. So this remains to be seen, but probably we have experienced a longer period of lower inequality with the prospects of declining inequality, and maybe, you know, this will continue over time given this significant change in the political structure of the country. Okay. So again, going back quickly now, the main driver behind the reduction in inequality is the increasing labor income at the lower end of the income distribution. This has been discussed by Vargas and Garriga in 2015 and by Rios Avila. Just to give you an idea, the real minimum wage increased by 122% from 2000 to 2015 in Bolivia. The real average labor income increased by 36% during 2000 and 2013, and the wage gap between the skilled and unskilled workers have also fallen in recent years. Now, so in this paper, I decompose the Gini coefficient. So I'm interested in understanding the dynamics behind the decline in income inequality in Bolivia. So you can decompose the Gini coefficient between class inequality and within class inequality. So the reduction of the Gini coefficient is explained by either a between class reduction in inequality or a within class reduction in inequality. So I'm interested in finding out what is the main driver in terms of class analysis behind the reduction in income inequality in the country. So I'm going to use household survey data that is, and then this data is divided into urban and rural areas. And then the main variable that I'm going to use is the real income adjusted for prices to 2015. Now, the main result of this analysis is that the decrease in the Gini coefficient between 2006 and 2015, these are the two years that I use in the analysis, is largely explained by a decrease in intergroup inequality. So the decline in the Gini coefficient in Bolivia is explained by a decrease in intergroup inequality. So the inequality between different classes in the country has decreased. So rather than observing a decline in the Gini coefficient as a result of a decrease in within group inequality. So this is a very interesting And a very important result. So this suggests that the post-neoliberal strategy in Bolivia has been equalizing, right? So there has been a significant increase in economic growth, and given the decline in inequality, and given that this decline is actually explained by a decrease in intergroup inequality, we could characterize the post-neoliberal strategy as growth equalizing. So this is the main result. Now, let me show you how I arrived at this. So I used the Itzhaki decomposition. Maybe some of you are familiar with this type of exercise. And again, the 2 years that I take into account is 2006, that represents the end of the neoliberal period and the beginning of post-neoliberalism. And the second time period is 2015. So 2015, the post-neoliberal regime was almost a decade in place. So it will allow us to really see some of the effects of many of the changes that took place between 2006 and 2015. Now, as it is the case with household data of pretty much every country in the world, unfortunately, the upper portion of the income distribution is not adequately sampled, right? So high-income households are underrepresented in household survey data, and then this may lead to actually to undervaluing the level of inequality. So the level of inequality may be even higher than it is reported by any of the organizations that work with income data. Okay. So following Klug-Barham paper of 2010, I used the Itzhaki method for decomposing the Gini coefficient. And then in this methodology, the focus is to decompose the Gini coefficient into two components: intergroup or between group inequality and intragroup inequality. And then this methodology can also be used to obtain a point measure of individual classes stratification. So there is a paper by Itzhaki that was published in 1994 that explains this particular methodology in detail. So I'm not going to go into those details. Rather, let me show, or let me tell you what are the results that I obtained once I use this methodology and in the Bolivian household survey data. I divide the income earners in urban areas between three different classes: the urban elite, urban workers, and independent workers. So independent workers would be workers that work in the informal economy. And then in the rural sector, I divide income earners between a rural elite and non-agricultural workers and small farmers and agricultural workers. So you can see there are two important points of this particular table. So if you compare the income of these different groups between 2006 and 2015, you will notice that the real income of the urban elite actually decreased between 2006 and 2015. Right? It's not a considerable decrease, but it actually declined in real terms. And then you can see also that the proportion of income going to urban workers, or the income rather of urban workers between 2006 and 2015 increased. But there is a dramatic increase in the income of independent workers in urban areas between the two time periods. So independent workers experience an increase in income of almost 60% between these two time periods. So again, when there is a claim that the decline in income inequality is explained by the increase in the labor income of the lower portion of the income distribution, this is the point, right, that researchers are getting at. The income that informal workers receive has increased quite significantly between these two time periods. Now, this is the actual decomposition of the Gini coefficient. And so the most important result here, so go to the very last row of this particular table, and then you will see that in 2006, intergroup inequality explained 40% of the Gini coefficient of 2006. Okay, and now go to the second column of the table, and it turns out that in 2015, intergroup, this is between class or between groups inequality, only explained 20% of the Gini coefficient. So the decline in the Gini coefficient, again, is mainly explained by a decline in intergroup or between group inequality. So again, I think this is a very important result, because it suggests that the growth regime in place in Bolivia has been equalizing. Okay, so how am I doing with the time, Ibrahim?
Maybe finalize your last comments.
Concluding remarks. There you go. So last slide. So some of the concluding remarks. So this is work in progress, and then actually I have I'm also planning to use different methodologies to engage in the Gini decomposition exercise. But as a concluding remark, the Bolivian post-neoliberal strategy has led to a decrease in income inequality by the narrowing of between-class inequality. So in a further project, I would like to take a look at ethnicity. So it turns out that in the Bolivian case, class and ethnicity are highly correlated. So the working class and agricultural workers are mostly of indigenous descent. The urban elite is mostly of European or mestizo descent. So it would be interesting to see what is the decomposition by taking into account ethnicity. Okay. Now, when comparing the neoliberal period and the post-neoliberal period, during neoliberalism, inequality was not considered a policy variable, right? On the contrary, under neoliberal ideas, inequality is considered sort of temporary phenomena, right? As the country is developing, the country will observe an increase in inequality, and then there are, some sort of automatic mechanisms that will bring inequality down. That never happened in the Bolivian case. Inequality actually increased throughout the neoliberal period. And then this suggests that inequality can be a policy variable, an important policy variable. And that's precisely one of the hallmarks of the post-neoliberal strategy. So I think the post-neoliberal strategy, at least there were two goals. One, to increase the rate of growth of the economy, but the second one was to decrease inequality and poverty. So that's it. Thanks.
Thank you. Thank you, Raul. Good ending point. Under capitalism, inequality does not decrease automatically. All right. So, as I mentioned before Raul started, the plan kind of now is for Cesar to present, and then we'll have 20 to 25 minutes for discussion about all the different and comments from the speakers on all the different presentations. Just a reminder for the attendees, if you have any question for any of the presenters, please put them in the Q&A, and we're going to have 25 minutes at least in the very end to discuss all these different aspects and connect them to each other. Cesar, my friend, the floor is yours.
Thank you so much. Can you hear me well? I am asking always this because I have these problems with the microphone. That's okay?
You're doing okay, yeah.
Okay, thank you so much. Now can you hear the presentation here, right? You can look the presentation here, right?
Yep.
Okay, good. So, well, it was very good to have this former presentation of Raul, because he mentioned that Latin America is one of the more unequal, or one of the regions with the highest, is the region with the highest income inequality. And many of the cases that we can see about the political economies in Latin America are the same. So, and now I am also talking about a country in the Andean region, which is Peru, the country where I am from. So my main issue with this presentation is to show, my aim with this presentation is to show a long-run reconstruction of the national accounts for factor income distribution, which is based on a previous paper, well, it was my master thesis in Peru. These were I think I can tell that these were one important work regarding income distribution, because in Peru we had a lot of national accounting data for this kind of variables, but not a long run series. Time series. So I think that this is one important point to recast when starting this presentation. Then I am making some international comparisons, very brief and very briefly check some stylized facts about this issue. And then I am going to the rough, more perform numbers in terms of decomposing these wage and profit shares that I reconstructed, and I tried to evaluate as well the economic growth regime of Peru by looking at, or by estimating, a sort of elasticity between the GDP and the wage share, as I am allowed by working with this new data. So what is the main problem with national accounting in Peru? Is that we have tons of data, but the problem is that we have different pieces of this scattered all over the place. And this is one issue related with, or I can tell that many political and historical studies in Peru emphasize that this main issue, or this issue, was related to 2 points. One was that the economic elites and the technocratic elites were not so aware, or they didn't consider that it was relevant to have continuous working on statistics, and they were basically looking at have long-run series for indirect income tax data, which is mostly related with the both agriculture and mining exports. So they were not really aware, or they didn't consider it relevant to construct this factor income distribution. And the other one, the other reason is related with the political changes coming since or getting back the 1990s. During the government of Fujimori, most of the statistics departments changed. Fujimori's government got rid of the the National Institution of Planning. So National Institute of Planning was the main, was the head of the whole system of national accountants in the country. So they changed the focus, and also the central bank changed the sort of objectives that they had. The central bank was also an important institution for constructing this national accounting and this factor income distribution data. But still, I mean that the National Institute of Statistics is constructing the data, but they don't present a long run time series for doing this. So my main issue in a previous work in 2015 was to reconstruct this series, as I said. So I tried to basically overlap this scattered data that I found out in the different reports that I get in this coming from, again, the central bank, the National Institute of Statistics, and other more personal research or more independent studies. So the main problem was to conserve the behavior of different year bases, because in Peru we got like 5 different input-output matrices for constructing the aggregate value and the income distribution. So I tried to follow the methodology of a Venezuelan economist, Pedagua. So I tried to overlap and maintaining the same behavior of the most recent factor income shares, and to reconstruct the GDP for these different reports, so I can have like a more stable and more reasonable behavior of the wage shares. I mean, that we don't have a very non-significant or spurious jumps between different pieces of the time series. So the result of this exercise are those series that I'm going to show. I mean, I am not getting in details because I don't have so much time, but I can discuss this. I discuss these details in the paper. But as I said, this is one of the longest time series of the wage share, profit share, and the mixed income share for Peru since 1942 through to 2019. Why mixed income share? Because as we already saw in the previous paper of Ibrahim and Raul, in most of these underdeveloped countries, as Peru, have a great share of informal or self-employment labor. So in the case of Peru, the structural conditions of the country were based on this kind of dual labor market economy, in which most of the time, most of the people who have jobs are working in the independent sector. But another layer regarding this issue is this difference or this double source for this independent sector. Before the later 60s, most of this independent employment comes from the rural areas and was related with agriculture. Basically because since the later 19th century, the Peruvian economy specialized in exports of agriculture commodities. Since the colonial times, also mining was one of the most important commodities. But in the late 19th century, the phosphates exportation became one of the most important commodities. Then at the beginning of the 20th century, either rice, sugarcane, or other kind of agricultural commodities became the most important. So this was also the main source for the employment of indigenous populations in the new kind of regimes that they have, but also from immigrants coming from either Asia or Europe as well, who were employed in the agricultural sector. Nevertheless, after the, as I said, after the 60s, the share of this agriculture employment, and because of that, the share of this agriculture mixed income reduced, for giving more space to the non-agricultural mixed income share, which is related also with the kind of modernization process of the country. Why I am saying modernization process in quotation marks? Because the problem with the Peruvian economy is that it was not fully industrialized, or there were attempts to industrialize the country during the later 60s and 70s. Also in the 80s, during the first government of Alan Garcia, 1985, 1990, but it was not really accomplished. But most of these people who were working before the 60s in the rural areas come to the bigger cities because of the increasing of GDP per capita in these areas. But they didn't get jobs. They didn't get any jobs. So that's the reason why in this during the 60s, most of this new urban population became informal workers or self-employee workers, but in non-agricultural or modern sectors, as very tiny manufacturing or petty commodity selling in the cities as Lima, for instance. It was it was the most relevant case in Peru. So that's the reason why we have like a very is short increasing in the behavior of the non-agricultural mixed income share, but also a stabilized pattern which comes to nowadays, in which we in Peru are discussing a lot about the problem of job informality. Some recent figures on informal labor in Peru or self-employment labor says that informal labor are up to 80% of the whole the labor supply. So it's a very important issue to reconstruct this mixed income share data. And finally, the profit shares that I am going to show how in some case this is useful to construct a gross profit rate. And I am comparing this with the terms of trade for the Peruvian economy. And my case is that, or my argument is that the behavior of this profit share is pegged to the movement of the price commodity cycles, basically because of mining nowadays, but also, as I said, agriculture exports during the 40s, 50s, and 60s. And as I said, in the 90s, one of the relevant issues was, again, this re-specialization in the commodity basket for exports in the Peruvian economy, but also the government of Fujimori results into a turn in the economic policies that the government applied. I mean, that they privatized a lot of public enterprises which employed most of the urban populations. They also get rid of the Fujimori's government got rid of the central planning institution as well, but also in the 1992, Fujimori applied these shock policies to get rid of the hyperinflation process. So the minimum wage share diminishes a lot, and the some control prices also were lifted. So the main result of this, of all this set of policies, was this decline or this change in the pattern of both profit shares and wage shares in the country. As you can see here, we have that before the 70s, the later 70s, wage share was more relevant than the profit shares, because again the economy was not full developed. But then in the 90s, after the turbulent situation of the 70s and 80s, then in the 90s we have a change on the pattern. Profit shares are superior than the wage share, but also are very unstable. That's the other reason why the Peruvian economy cannot jump to greater economic growth rates. And this is a kind of a summary of statistics if we follow some sociological and political classifications that some experts present in Peru. I'm not going into details with this because we don't have so much time, but this wage share series gives an important tool for comparing the economic or the distributive situation of Peru with other countries. Most of the exercises that I can do with these income share distributions are not only related to inferential statistics, but also I can do this kind of descriptive exercises. So if I can tell, if we compare the wage shares of different countries in the Andean region, including Brazil and Mexico and the USA, so we can say that most of them follow, or all of them slightly follow kind of the same pattern. And the reason is that imperialism is an important issue in the Latin American region. Most of the countries were pegged, especially Peru since the 60s, because of the Alliance for Progress. Most of these statistics actually of national accounting started in the 50s and 60s. In the 40s because of the commitment of the Peruvian government with the Bretton Woods institutions, but also in the 60s because of the Alliance for Progress. Actually, JFK was pushing the Peruvian government to do agrarian reform. They tried to do a slightly one, but it was not a totally fully developed agrarian reform. The agrarian reform come with the revolutionary government of the army forces in 1968 with Velasco Alvarado. But as I said, in the 90s, if we look at the later space here for the wage shares, we have that there is a high decline in the wage share for the United States, and I am reading this by looking at the right axis to measure the USA wage share, and the other axis for the other countries' wage share. So I'm rushing with the time here, but I attempt to do in this work also two more exercises: the decomposition of the wage share into the average labor productivity, the average labor cost, and the rate of the salaried employment rate. So the results that we have here is that we have a declining in the average labor cost of the average rate of wages till 1992, then a slightly recovery because of the 90s government solving the problem of hyperinflation. But still, we have that after the 90s, the gap between productivity and the average labor cost increases a lot. I can comment this in another moment, but finally, the composition of the profit rate, the gross profit rate that I mentioned, if I compare this with the terms of trade index for the Peruvian economy, shows that we have a very tight or very pegged economy to the international economy move cycles. So this is again a very important result in terms of stating again or emphasizing that the Peruvian economy is still really dependent on the international boom and bust cycles. I can skip this, and finally briefly the results that I got from the estimation of this sort of model based on the works of Lavoie and Stockhammer. A previous paper of Nastepad and Storm published in the Journal of Keynesian Economics also attempts to do this kind of estimation, simultaneous estimation of the aggregate demand components by using also a factor income distribution. And the main objective is to estimate this kind of elasticity, as I said. So I try to do this with two kind of methodologies. The first one is the three-stage least squared method, which is a kind of very old-fashioned, I can tell that, but still it makes sense because of the size of data that I have. I don't have so many observations because of those are yearly based. And also I test the regimes for two different periods with this first methodology: 1942, 2019, 1942, 1990, 1990, 2019. And then because of this series has union root, the problem of unit root, so I try to do the same for the full period 1942-2019 with the co-integration estimation equation. So the results, as I said, again, shows that we have, this is the results for the elasticity for the full period. The case that the Peruvian economy, even though it was very specialized or is very dependent from the trade balance, it is still a kind of wage-led growth economy. Even though if we split the periods, we have that 1990 made the case that the effects of the pro-labor policies could be not so good if we look at the kind of more dependent structure of the trade balance that we have for this economy. And finally, the results of the co-integration exercise also does the same for the whole period, even though because I got rid of the spurious effects, I found out that a smaller if elasticity, a smaller level of elasticity, even though it's still positive for the whole period, and the same with the multiplier. I'm so sorry for taking so much time. I think that I'm still slightly good with this, but thank you so much, and thank you for the questions as well.
Thank you, Cesar. All right, I mean, first of all, thank you all. It's been an extremely rich, on the one hand, rich and very diverse, but also it's so interesting to see the common themes that we have in all of, I mean, whether we're thinking about the informal sector or we're thinking about neoliberalism or non-neoliberalism, if Adam, the way that you're thinking about it, premature deindustrialization, in a lot of the instances, I think there's a lot of very interesting common themes. So we do have 15 more minutes for discussions. If attendees have any questions, please add them. But you know, unless there are any questions, maybe we can go on within the discussion of some of these papers. I'll start by you know, mentioning a few on Adam's paper. So Adam, again, wonderful reading your paper. It was very interesting. Particularly because, you know, you're looking at the wage share going down, and there's a lot of literature on why the wage share has gone down. I mean, globalization, financialization, trade openness, and neoliberalism, right? But then you say, well, okay, you know, social policy has actually expanded, right? The wage share and wages in the state-run utilities sector has actually increased. Government consumption as part of GDP has actually increased. And so it's very interesting kind of the way that you looked at this mining wedge and connected. I did have a few questions. I'll limit them only to two. I think I sent you like a bunch of other ones that maybe later we can talk about, but two that I had in mind. One, obviously, because of my work, relates to measurement. You know, I know the informal sector, I mean, normally in terms of employment plays a larger role than in output. But, you know, I would imagine in South Africa as well, there is a significant portion of the labor force who's, you know, part of the informal sector. And I'm just wondering the wage shares, whether it's the aggregate or the sectoral ones, how that kind of relates in terms of measurement to the informal sector. Again, personally, something that I'm very interested in. The second question, well, okay, so maybe three. The second question is about manufacturing. So you talk about the commodity boom and, you know, how this has played an important role, but I was wondering how you see the connection between the commodity boom and the manufacturing sector. So if we think of this wage share as, in one sense, this counter-cyclical, you know, in terms of demand and capacity utilization, is it the same for manufacturing, right? Does manufacturing have that same role, given that, you know, also manufacturing relates to exports and what that commodity boom does in terms of, you know, quote unquote Dutch disease impacts? And finally, is the aggregate wage share useless? You know, like, and it's very interesting because both of us have been, I said this before we started, both of us have been looking about what the wage share actually means. I've been doing it in terms of measurement, but you've been doing it actually comparing it to other macroeconomic variables. And I'm just wondering, you know, is it not useful for us then to look at this aggregate wage share? You know, is it more relevant to look at maybe these sectoral decomposed ones in terms of searching for the causal relations that we want? So a lot of questions, but maybe if you can answer them in a couple of minutes, and then we'll move to the other papers.
Yeah, thanks again for these comments, these very insightful comments. Just on the informal sector, it's not included in my measures. So it's just the wage share, not the labor share. And partly I'm satisfied that this is still interesting to look at, because the informal sector in South Africa is historically small, relatively small to other developing countries. And there's a few question marks about why that is. One of the common explanations, you'll see it in kind of Danny Roderick's work on South Africa, for example, is relates to the historical legacy of policies restricting Black urbanization. So because there were past documents and laws that prevented people from coming to cities, blacks from coming to cities, that's there's some kind of path dependence, let's say, in the size of the informal sector. And yeah, so that's an observation. The informal sector is historically small, relatively small to other developing countries. But it still might be interesting for me to learn insights from your paper about how I can impute it and include it in my measures. On manufacturing and the commodity boom, I think as you say, Dutch disease is an interesting phenomenon. Let me share my screen very briefly. So I have a graph to show you. So this is one of my, I don't know if everyone can see it, but looking at demand conditions and the wage share is quite interesting in manufacturing. So here's capacity utilization in manufacturing in blue, in green, and the manufacturing wage share in purple. And, you know, they seem to be kind of negatively correlated, and kind of maybe a puzzle for Kaletskin. But, you know, they're kind of other stories about, I think, how demand conditions can be bolstered. During the commodity boom 2000 to 2008, I think basically an important part of the demand condition story is that you have a huge surge in demand for manufactured goods, represented by this part of the green graph. And so, you know, you have a windfall in income. I mean, that's likely to stimulate demand conditions. Obviously, you also might have an appreciation of the real exchange rate, and so it can be ambiguous. But it's about we see quite a considerable boom. The windfall generated more demand for manufactured goods domestically than it offset export demand. So I think that's one reason why commodity booms can actually stimulate demand under certain conditions. And why does that relate to the wage share falling? Well, demand conditions can also boost prices. Basically, if demand conditions are very high, quantity can't adjust, prices will adjust, and so markups might be pro-cyclical in that sense. The final question, the last question, was about the aggregate wage share. I won't be so bold to say that it's a useless thing to look at. I think it's very useful to look at. But I think sometimes we can miss a lot of the action if we just look at the aggregate wage share when there's such sectoral heterogeneity. And I think this is really especially important for us who care about structural transformation problems. If you think about structural transformation, I think it's always useful to look at the sectoral data, and some sectors matter more to national development strategies than others. So yeah, I hope I answered the questions.
Completely satisfactory, except for the comment on the Kaletskin, but we'll talk about that later. I also know that Raul and Cesar, you had comments on each other's papers. So please feel free to go ahead. And if any question pops up, I'll let you know, and we can tackle some of the questions from the attendees as well. So I think so. Raul spoke first. So Cesar, your comments.
Oh, okay, yes. So I really like the exercise that Raul did. I have two questions related with the results of the last table, which is this intergroup comparison or intergroup components of the Gini coefficient. So this question, I mean, how can I say this? In some point, we can tell that it's an important strategy to target the low-income groups in a very unequal society as Bolivia. But how does it relate specifically with a kind of government, more stable policy than a kind of non-continuous institution? I mean, that I remember that you raised this question on the kind of continuity of the income inequality cycle. So do you think that from the a kind of government situation of Bolivia, that this is going to be a sort of path dependence issue. I mean, that these are the kind of economic policies for reducing inequality that we are going to see in the next in the future in Bolivia. This is one thing. And another issue is related, and I forget here, like how much this reduction in the contribution of the intragroup, but the more relevance of the intergroup component of Gini inequality is related with the structural pattern in the Bolivian economy. And I mean that, okay, yes, we all agree here that it's not only that we wait for the economic growth to solve the income distribution problem by its own, but independent self-employment work, informal independent work in extractive economies is mainly related with these boom cycles. Because at least this is the case in the Peruvian economy. Every time when we have a region in which they discover sort of new mineral, the whole region goes through a process of modernization, or a non-full modernization. So in that sense, it's not only that the extractive sector labor demand increases, but also the labor supply coming from other regions goes to this region, and it increases the self-employment and informal work. And by that sense, the share of the income of these sectors of the labor supply or the labor force in that sense. So how could you explain, is this, again, my question is that, is this a change in the contributions of both inter and intra-group inequality related with more structural conditions, or, I mean, what is your guess? I know that you really think that it's an economic policy issue, but what can you tell about the extractive sector in Bolivia?
Okay, very good questions. Thanks, Cesar, for your comments. Inequality became a policy variable, right? And so it turns out that there are ways. And then, given that the decline in inequality in Bolivia has lasted at least 14 years, so that's an interesting period of time. And then one of the main reasons behind it is the increase in the minimum wage. So the role of the minimum wage in Bolivia, and in many developing countries, is different than the role of the minimum wage in the United States. So in the United States, for example, the minimum wage only affects a very small percentage of workers in the economy. But in developing countries like Bolivia, the minimum wage, which is set at the national level, can have important effects. So the decline in inequality is mainly explained, as it has been discussed in the literature, by an increase in income in the lower portion of the income distribution. And then, so the hope is that these gains will persist over time, right? But we all know that there are different political dynamics, and then also different international sort of specific conditions may also have effects on all of these variables, but at least for a significant period of time, these gains have been preserved. Now, going back to your question about the extractive sector, the main export of Bolivia is natural gas, which is a capital-intensive type of sector. And what is interesting, and maybe you all noticed in the economic growth diagrams that I showed at the beginning, is that even after the decline, even after the end of the super cycle of the increase in commodity prices, Bolivia managed to keep economic growth around 4.9%. During the whole period. So that's interesting, right? So these cycles of booms and busts have not caught up with the country yet. So the price of natural gas decreased significantly several years ago, but even with the decline in the increasing prices of natural gas, the country managed to achieve interesting growth rates. And still, the country managed to keep reducing the inequality. So that's definitely something interesting that we should study more to try to understand how these changes are informed by these sort of international type of conjectures, right? So there is a super cycle. In many cases, this super cycle may lead to a cycle of boom and bust, but at least given the experience of the Bolivian economy in the last 15 years, it doesn't have to be the case. So there are ways, I guess, to avoid the bust part. I don't know if it can be avoided for forever in a way, but at least, 15 years is a pretty good run, I would say.
Okay, so we have received the message that unfortunately we are out of time. I encourage any of the attendees, if they have any questions, on the web page for this panel, you have the emails of all of us, and I'm sure that the four of us will continue this extremely interesting conversation, not only about Cesar's paper that we haven't had sufficient time to cover, but also about the other ones. Thank you all. It's really been a privilege reading your papers and listening to you and listening to these conversations. I hope this is the first of many collaborations between us and bringing other colleagues of ours here. Unfortunately, because of different changes that happened, it ended up being an all-male panel, and I'm sure that's not going to happen the next time. So thank you all, and thank you for the attendees, and good luck, everybody. Have a wonderful rest of your days.
Thank you. Bye-bye.